Don't you hate surprises? I hate surprises when cost goes up. What happens once you buy your house, years and years down the road, you make a couple changes and boom, your property taxes go up. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. And today we're going to talk about property reassessment. You bought your home. You decided to make some changes. You added your son, your daughter to title. You made a couple changes. All of a sudden, your property gets reassessed and you pay a higher tax amount at the end of the year. Boom! How do you feel? You feel horrible, right? Today, we're going to talk to you and show you how to make sure your property does not get reassessed after you buy your home. Guys, if it's your first time tuning in, do me a favor, hit the subscribe button so you're notified every time we post a new video. We post a new video once a week, so definitely check out our show. So guys, let's get into it, right? Let's talk about property tax. But before we do that, here's a reminder. This is part 3 of Property Tax 101. It's 3 parts. We have a part 1. If you haven't checked it out, it's everything property taxes, right? What are your property taxes? Where does your property tax money go? How to calculate property taxes and impounds. Part 2 is about supplemental taxes. What is this supplemental tax bill after you buy a house, right? So also you can get another supplemental tax bill if your property gets reassessed. And we're on to part 3, right? Part 3 is everything you need to know about reassessment so your property does not get reassessed and also you don't get another supplemental tax bill. All right, guys, let's get into it. So, property taxes, part 3 of 3, property reassessment. If you own a home, the last thing you want to happen is for your property taxes to go up, right? Then someone tell you, well, if you buy a home, taxes should be fixed. You buy a home, you don't have to stress about renting anymore. What's the benefit of buying a home if property taxes gets reassessed, right? But first of all, what is reassessment, okay? What is property reassessment? This is when a property value gets assessed even though it has been in the past, right? The point of the reassessment is to obtain the most up-to-date value. So you bought a house at a specific purchase price. Under Proposition 13, if you don't know what Proposition 13 is, definitely go back to Property Taxes 101 Part 2 and understand Proposition 13. So Proposition 13 came out in the 70s to protect you, the consumer, from paying higher property taxes because your property gets reassessed on the new value. If your home gets reassessed every year based on the new value, your taxes would skyrocket. But Proposition 13 protects you from the assessors, the county assessors that come out and reassess your property every year. They're only able to reassess it at a 2% increase, right? Because of the 2% increase, your property taxes does not skyrocket, okay? So because of Proposition 13, it only gets reassessed every year at a max 2% rate. Without Proposition 13, it's going to go where the market trend is going. And if every year that it does that, you will pay a higher property taxes, okay? But if you do certain things to your property, they can come out and reassess it based on the market value. That's the last thing you want, is for your property to be reassessed on the current value. You want it to be assessed every year based on the 2% increase because you will pay less taxes, okay? So there are 2 reasons why your property taxes gets reassessed, right? The first reason, if you do upgrades to your house. I see this happen all the time. You need equity to renovate, right? But you want to renovate because you want this new value. Everyone takes pride in their home being worth all this money. And guess what? It's not worth it if they're going to reassess your property. For example, you bought a home for $400,000. 10 years down the road, you have tons of equity. Let's say the home is worth $600,000. You pull cash out on a cash out refinance, which is fine. Your property will not get reassessed on the market value. But if you do any upgrades requiring permits, they will come out and reassess your property based on the new market value, right? This is where, back in the days, people that renovate your house, give it more value. Don't do it. Why is that? Because if you do it, they'll reassess your property. So like I said, you buy your home for $400,000. Because of Prop 13, every year it just assessed 2% more. From 400,000, it would go up to 408 the following year, right? If it wasn't for Prop 13, on 400,000, it can go up to 420. If the value goes up 4% a year or 5% a year, it can go up 16,000 or 20,000. With Prop 13, it protects it going from 400,000 to 408. So as it compounds more and more based on a higher inflation rate, you can pay a lot more on market value. So you want to avoid that. So people do this all the time. They pull the cash out, they renovate their property, they add square footage, they add bedrooms, they get permits, and all of a sudden they're paying taxes on reassessed value on the new market value. So that's the last thing you want to do. So if you're going to pull cash out and renovate your property, you might want to think twice before what renovations you want to do. Of course, if you want to sell it, yes. But if you don't plan on selling the house, do not do renovations that require permits unless you're okay with getting your property reassessed. Okay? So that's one way they will come out and reassess your property, right? And here's the second way. Change or transfer of title. Okay? Change or transfer of title. I see this happen a lot. People buy a house with a co-signer, right? They buy the house and they add someone to title, or they're taking someone off a title and they're not doing it correctly, okay? And when they don't do it correctly, the property will be reassessed. So if you have a house and you buy it with your spouse, only time you can take your spouse on or off the transaction, the property will not be reassessed. If you bought the home before you got married, though, your property can be reassessed. If you bought the home while you were married and you take your spouse on or off, the property will not be reassessed. If you bought the property and you had a co-signer and you remove that co-signer and you switch that co-signer, the property will be reassessed. If you bought a home with a co-signer and you remove the co-signer and not add another co-signer, the property will not be reassessed. The name of the game, pay attention and who is on title on your home. If you don't, changing that person can cause your property to be reassessed. The best thing you can do, best practice, if you buy a home with a co-signer, remove them from title right away after you close escrow and they're just on the loan. Then your property will not be reassessed, okay? So make sure when you're buying a home, pay attention to changes in transfer of title. Well, the question that people ask all the time is, what about if I want to give my house to my son, my daughter, my grandchild, my granddaughter? That's okay. If you want to transfer it from parent to child or grandparent to grandchild, that is okay, and your property will not be reassessed as long as you follow the certain rules and certain steps, okay? So, frequently asked questions first before we get into that. Remember, you can go to this site. If you live in California, all the Q&A and frequently asked questions are in there. If you have more questions to find out, hey, if you change people on title or you have a specific question, will your property be reassessed, okay? Definitely check out the frequently asked questions and hopefully they will give you an answer. If they don't give you an answer, you can email them and then they will give you an answer, okay? Next one, right? Transferring property from parent to child or grandparent to grandchild, okay? So it is possible, but the only two times it's possible is when you're transferring from parent to child or grandparent to grandchild. If it's brother to sister, cousin to cousin, uncle to nephew and niece, your property will be reassessed. It doesn't matter if it's in a living trust or in a trust. If you transfer, it's not from parent to child or grandparent to grandchild, the property will be reassessed, okay? But if you are doing it the right way, you can protect yourself from it being reassessed. And phooey on you, if you know a realtor out there, or these realtors are charging to do a transfer of title, or hey, let me set it up where you can buy the house. You can do these transactions without using a real estate agent and getting them involved in increasing the cost of title or of escrow. You can do it as refinancing. You can do it as a purchase, but it does not require a real estate agent. Protect yourself from real estate agent commissions, from higher title fee, higher escrow fees, right? You can transfer through a refinance. You can transfer to a gift of equity. You can purchase a home from a relative, but you do not need a realtor, right, to do that. Yes, there are laws that will protect you that title and escrow can handle for you, that you do not need a realtor. So if you are doing a transfer and it's not from parent, right? Or if it is, you do not have to do it as a purchase. There's ways you can do it as a refinance. There's a lot of different strategies you can do, right? You do not have to set it up as a purchase and pay those fees, okay? So let's get back into it. So transferring from parent to child, okay? So there's something called Proposition 58. It excludes transfer from parent to child and from getting the property reassessed. I left you the link right here. As long as you take care of the form before you start the refinance or the transfer, the property will not be reassessed. It happened to me. My parents bought their home in 1990, right? And the property was $190,000. In 2017, we transferred the house from my parent, from my dad, to my brother, and it got reassessed at $500, I think $550, almost $600,000. Think about the supplemental tax bill on that transfer was insane. They give you 3 years to get it adjusted back to this Prop 58. But guys, girls, do it up front. You know how hard it is to go to the county and get it readjusted. Trust me, they're holding on for dear life for you to make mistakes. They want the higher property tax assessment, right? So, of course, we went past the 3 years. We lollygagged, right? We didn't think it would actually happen because we had 3 years. And guess what? Now we're paying property taxes on my parents' house at $550,000, $600,000. It's insane. So definitely make sure if you're going to transfer it from parent to child, right, that you take care of this form. I left you the link right here, right? I left you the link right here. Check out the link. You're in California. Take care of that form. So when you transfer the loan or you refinance in your child's name, it's okay. Also, if you refinance the home and you want to give your parents money, you can pull cash out right away because it's a transfer from parent to child, right? Because it's from parent to child and it's an inheritance, right? You can pull cash out right away. You don't have to wait the 6 months or 12 months. You can do it right away, okay? So make sure when you go parent to child, if it's owner occupied, there's no limit. If it's not owner occupied, there's $1 million limit, right? If you want more answers, go to the link, check it out. They'll explain that to you, okay? Next one, Prop 193 excludes transfer from grandparent to grandchild without getting the property reassessed, okay? Remember, if it's from grandparent to grandchild, the parent has to pass away, okay? So if a grandparent transfers to a grandchild and the parent hasn't passed away, the mom or dad hasn't passed away, you will get the property reassessed. You would have to go from grandparent to parent, then to grandchild, if you want to prevent yourself from getting your property reassessed, okay? So make sure you follow these rules. There's also a form right here for Proposition 193 to protect yourself, right, from getting the property reassessed. It's really important that you do this, okay? Other rules, other regulations, if you want answers, there's frequently asked questions on Prop 58 and Prop 193 right here if you have questions. And last but not least, if you're over 55, Proposition 60 and Proposition 90, right? If you're over 55 years old and you sell your house, right, to downsize in the same county that you live in, Proposition 60 will protect you from the new property you buy from being reassessed. Let's say you bought a home for $400,000, right? Every year, because of Proposition 13, it only can go up 2% a year in reassessment, right? Let's say the home is worth $1 million. 20, 30 years later, when you sell the house, you're only paying it from the assessment from $400,000 and 2% a year increase. You're not paying on the $1 million that your home is worth, right? But let's say you sell your home, you buy your new home. As long as it's under $1 million, you will inherit the original property tax minus the 2% increase on your first home, okay? You have 2 years to buy it. If you wait after the first year, as long as your new home isn't over 105% of your current home. If you wait 2 years, it's 110%. But Proposition 60, right, will protect you from getting that higher property tax on your downsizing home, okay? But you have to be in the same county that you currently live in when you sell and up to downsize. Proposition 90 is there to protect you if you change counties, but the county must participate. If it's in Southern California, most of the Southern counties participate. But look it up, Proposition 90, make sure the county you're transferring to participates so you can make sure you walk into your old property taxes on your new home, right? Protect yourself. If you downsize, you shouldn't get penalized, right? But you can if you don't follow the right steps. Make sure, guys, there's the formulas right there, the frequently asked questions right there. So now you know how to protect yourself, okay? So if you're transferring home or you're downsizing, protect yourselves with these forms. Proposition 58, 193, Proposition 60 and 90 is there to protect you from your property getting reassessed. No one wants surprises, all right? Let's recap. If you own a home, make sure you don't do any renovations with permits if you don't want your property being reassessed. If you bought a home, if you do any upgrades, and you do renovation that wants permits, do in the first handful of years. Don't wait 10, 20 years down the road. Do not take pride in a higher value. Now you have to pay the higher taxes, okay? So protect yourself. No permits unless you're okay with a higher price, right? Reassessment. If you're selling your house in a couple years and you want to do that, go for it. But if you plan on living in the house long term, I do not recommend it, okay? Second, transferring title. If you're selling the house to any in-law or family that's not a child or grandchild, your property will be reassessed. If they inherit the house, you're going to have to pay the higher property taxes, okay? And remember, you do not need a realtor if you inherit the house. You do not need a realtor if you're selling it to a family member, right? Even though the property taxes might reassess, you do not need a realtor. Protect yourself from real estate fees, protect yourself from title fees, protect yourself from escrow fees, okay? Now, if you are going to go from parent to child, Proposition 58 is there to protect you. From grandparent to grandchild, Proposition 193 is there to protect you. If the parent of the child has not passed away, your property will be reassessed. It would have to go from grandparent to parent to child if you're trying to transfer to the child or the grandchild from not getting reassessed, okay? Also, selling your house, Proposition 60 is there to protect you. If you're staying in the same county, you're probably being reassessed as long as you buy under the purchase price of the home you're going to sell. Example, you bought a home for $400,000, okay? It's worth $1 million. You sell it for $1 million. As long as you buy under $1 million, you're fine. If you wait 1 year, you can go up to 105%. 2 years, 110%. That's the max. But you have to buy in the same county. If you do not, you can use Proposition 90, but it must be in the counties that participate. And all the Southern California counties participate. So that's the recap. Hopefully you find this information useful. If you did, do me a favor, hit the like button, okay? Also, guys, if you haven't subscribed to my channel, we have new information coming out every week. Definitely hit the subscribe button and definitely share this information. This is valuable information that for anyone who is going to be a homeowner or anyone that is currently a homeowner, right? This information protects them, protects you, any homeowner, from getting your property reassessed. We want to end all our live stream with our attitude is gratitude. Without you, there would be no us. So thank you guys so much and have a great day.